Hey guys, welcome back. Patrick here. Well, it is a great time to be an investor. I hope you guys managed to catch the wave. All of the stocks that we've been talking about over the past week have gone up. So I hope you guys were able to make some money. But today we're going to be doing something a little bit different. Every time I talk about stocks, usually I talk about them in terms of long-term buy and hold. If you're going to be holding them for a year, 2 years, 5 years, how's the company? Like, do they have a lot of potential? Are they going to do well and execute on their plan? But today we're going to do something different. I'm going to be talking about one of the short-term momentum trades. Often I talk about them in the videos, but I don't really give you examples because by the time I do my research, by the time I execute the trades, and then often it's too late. So I don't want to make a video about something that you can't really relate to because, you can't really do it yourself. It's too late. Today's going to be a little bit different. I'm going to show you one of the trades that I'm working on right now. It is a recovery play and it is under $5. Some of you have asked me for stocks under $5. Well, this is one of the plays. So what we'll do is I'm going to tell you what stock it is, what my thesis is for this investment, and then how I'm building the trade. So let's get started now. But please, as usual, like and subscribe. It really helps out. Alright guys, I'm so excited to show you how I construct these short-term momentum plays, and then I use that profit to reinvest in long-term buy and hold. Because there are companies that I want to hold for several years, but then there are other companies where I don't really like the industry, I don't really believe in the company itself. So it's not a company that I want to hold long-term, but the share price is moving in the short term, so we kind of exploit that to make some profits. So no, we're not going to be talking about the Cheesecake Factory, but this is one of the stocks that Jeremy from Financial Education and some other YouTubers have been talking about, the recovery stocks. Well, during the summer, I mentioned that it was a great idea to pay attention to those stocks that had been really recovering very, very quickly when they were talking about that V-shaped recovery. Because what I said is that when the market started to struggle again, well, eventually the tide always turns. So when the tide turns, these same stocks that were really hot and people were flocking to, they were the ones that were going to go up again. So that's exactly what happened with the Cheesecake Factory, right? So they called this one correctly. I want you guys to pay attention to the pattern because you'll see it's the same for basically every stock. So there was that huge sharp drop in April during the crash. Then they were talking about that V-shaped recovery. Then for a period, like all throughout the summer, you guys remember there was a lot of uncertainty. People were really not sure. People were starting to see signs of a second wave. Before the election, there was like that whole election uncertainty. So all these stocks, right, that were called recovery stocks, had stopped going up really, right? They were mostly going sideways. But since the election, now that money is going back into the stock market and there's that frenzy again, those same recovery stocks are all going up. So we have Cheesecake Factory where now it's almost back to the price where it was before the pandemic started. So there's not a lot of meat left on that bone. You don't really want to invest in this company for short-term momentum. Same for Delta Airlines. This was one of the companies that everyone was really paying attention to. Remember that when they were talking about that V-shaped recovery? Well, here's one of the stocks. You see the exact same pattern. Big crash, then that peak here, then it trended sideways for during the summer, and now we're in that frenzy again, so now it's going up. MGM, same thing. Big crash, peak here, trending sideways, and now it's going back up in an uptrend. So you guys can see the pattern, right? Carnival Cruise Line, everyone saw was looking at this stock too, one of the recovery stocks. Big crash, peak, trending sideways. Now slowly it's starting to go back up. But we're not going to be talking about any of those stocks. We're going to be talking about AMC, the theater chain. Yes, guys, under $5. And no, I'm not trolling you. It's not a joke. Like, give me a second. Why would anyone want to invest in this company? Yeah, that's probably what you're asking yourself, and you would be right. I mean, this company, everything about it is wrong right now. A couple months ago, right? Cinema chain AMC warns it may not survive the pandemic. They were closing locations left and right because states would not allow them to stay open. So they had to close all of their locations down. Now, eventually they reopened, but as you guys can expect, almost no one was going. I went to see the movie Tenet a few weeks ago, right, with my friend. It was me, my friend, and 3 other people in the entire movie theater, basically. But, it is what it is. They had to reopen. Now, AMC Entertainment may file for bankruptcy for real as reopening stalls. So even though they are reopened now, there's just not enough people going. They're not making any money. In fact, when you look at their financial results for the third quarter, it is very abysmal, guys. Look at this. 2019 to 2020, a loss of revenue of over 90%. Then profits, wait, sorry, did I say profits? I meant net loss, 54.8 million to 905.8 million. So as you guys can see, the company is bleeding money. They are not doing well. But now that we have the anticipation of the vaccine is coming out, that should really help the company recover, right? Well, not necessarily. A lot of the Hollywood studios, right, it is true that there is going to be pent-up demand. I want to go back to the movie theater. A lot of people want to. And the anticipation was that the big Hollywood studios were holding back some of those blockbuster movies so that after the pandemic, they would all release in the movie theaters and then would generate a lot of interest. But not so much. A lot of the studios like Disney, you guys remember when they put Mulan in Disney Plus instead of bringing it to the movie theater exclusively? Well, now they're thinking about doing that with Cruella, Peter Pan and Wendy, and Pinocchio. And they're not the only ones. A lot of the other studios are doing similar things. So they recently negotiated that they were going to have 3 weeks of exclusivity with Universal, but after that, they were going to be able to be streamed online also. So with all of that said, why would you ever want to invest in this company, right? This is not a company that I would want to hold 3, 4, 5 years from now, right? Eventually it might recover, but it's just not a great industry to be in. So with all of those negative news, this is a stock that should be getting absolutely crushed right now, correct? That would be rational, but we all know that the stock market is not always rational. This is a stock that was in a downtrend since 2019. Nothing was going well for it. I'm going to draw a line for you, right? If you look at this on the chart, you can see that in 2019, at some point, the stock was above $20, and now it's at $4.58. Is that a steal or what? Well, look at how it kept making lower highs. Here, 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 and lower lows. Here, 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 here. This is a pure downtrend. So the company had absolutely no momentum. In fact, it had negative momentum. But since the first part of the recovery early on in April, this is one of the stocks that's been doing really well, right? There was that, this is called a double top, here and here. I'm going to draw a line also to show you guys. So we can expect that this is going to be one of the main resistances eventually. Well, if we look at it closer, and this is between $6 and $7. I'm sorry, the line is not perfectly straight. I'm doing my best. You guys know, like, this is for entertainment purposes. I'm doing this on the fly. So as you guys can see, now it had gone up, down, up, down. Now it is on the path going upward, and it crossed on MACD. It had been oversold. Now it's going towards the overbought. So what can we expect from this stock? Here, it's not about the fundamentals of the company. The fundamentals of the company are atrocious. I don't want to hold the stock for a few years or anything like that. This is purely about market sentiment and people going after recovery stocks. So as long as the stock market is in that feeding frenzy where all the recovery stocks are getting bid up, right? There are some companies like Cheesecake Factory that has already almost fully recovered, but then there are other companies like this one that is trailing behind. It's kind of lagging. So it's that lag, that rubber band effect that I'm trying to exploit in this situation for this play. So at 458 and after hours 481, this is what I'm going to be doing. I expect that the stock will go up above $6. Now, it all depends on how the vaccine delivery happens. As long as the stock market expects that people are going to start getting those vaccines in December, right, the first batch, and then over the next few months, people are going to keep getting vaccinated, then the stock market is going to factor that in positively, and AMC is one of those stocks that's going to recover. Now, I don't expect this stock to go back to $20. I don't expect this stock to go back to $10, $12, right? This is a stock that's been really, really battered and doesn't have a lot going for it. But what it does have is a very nice pattern here where, I mean, we saw that the top twice was between $6 and $7, and even before the pandemic it was in that $6 to $7 range. So it is very, very likely that the stock will go back between 6 and 7. So in the close, the big question is, how do I construct this position where I maximize my gains but also minimize my losses? because this is a very volatile stock and I might be wrong, right? Tomorrow it can crash. This stock doesn't have a lot supporting it. It is based entirely on people's feelings about the economy. So if that turns, right, if the market is down tomorrow, who knows? This stock, instead of being up 20%, can be down 25%. So that's why I have to really cover my downside. So how do I make this play happen? Well, there's two different ways. The first one is to buy shares. And here I'm going to use the market price, not after hours, because after hours keeps changing. So let's say that I buy shares at $4.58, and then if the price goes to $6, that's about $1.50 in profit. And then on the downside, if I'm wrong, I'm going to set my stop loss at $4.30. So I'm going to lose about 25 cents per share. So that is a 6-to-1 ratio of money risked versus potential money gained. And I try to stay above 5-to-1 ratio usually. That's the way I do it. Option number 2 is more risky, more aggressive, more leverage, but also more profitable if I'm right. That is to go with call options. Now I'm going to go over this very quickly because I don't want you guys to copy it. If you don't know a lot about options, like, don't even look at this. Go watch more videos about options, learn a lot, and eventually you'll understand and you'll be able to do it. I don't want you to lose money and then you'll be upset at me. So the stock's at 458. I'm going to look at December 4th expiration date. I went with calls at $4 strike price. I opened 10 contracts and I paid 65 cents. So the reason why I'm going a little bit further out in the money is that even though these are cheaper at $4.50, right? You would pay 48 cents instead of 75 cents. Well, the break even is higher. If you make the addition between the two, $4 plus 75, that gives you a break even price of $4.75. So anything above that, you're in profits. But at the same time, the $4.50 strike price, you add 48 cents, that gives you a break even price of $4.98. So even though they are cheaper, it makes it a little bit more risky. So then after that, same thing as with buying shares, I add a stop loss. So I pay 65 cents for the actual calls, and I set a stop loss at 50 cents. So I can't lose more than 15 cents per share on the actual call options. So guys, that's how I do it. These are the two options. Let me know in the comments if you enjoy these types of videos that are a little bit more practical. It's not theory. It's not me talking about, more general concept. This is really one investment that I'm doing. Let me know what you think. Let me know if you would ever invest in AMC like this. Right? I'm not interested in holding the stock 3-5 years. I would never recommend anyone buy into it. But for a short-term momentum play, the only thing that really matters is the chart. It goes down, now it's going up. We'll see how far it goes up. Talk to you guys later.